What taxes do pop-up drink stands have to pay? Pop-up drink stands typically have to pay sales tax on every drink they sell, self-employment or income tax on their profits, and sometimes a local business license fee or health permit fee depending on the city they operate in. Think of it like this: every time someone buys a lemonade or a smoothie from a stand, a little piece of that money has to go to the government because it's called sales tax, and the stand owner is just collecting it for them, not keeping it for themselves. Then, whatever money is left over after buying cups, lemons, sugar, and ice is called profit, and that profit gets taxed too, almost like the stand is its own tiny business, even if it's only open for one weekend. Here's something a lot of people don't know. In many places, even a tiny pop-up stand can be legally required to get a temporary food and beverage permit, and if they skip it, they can get fined even if they only made $40 that day. Another surprising thing is that some cities charge what's called a transient vendor tax, which is a special tax just for people who sell things temporarily instead of from a permanent store. This tax exists because cities want to make sure short-term sellers pay their fair share too, since they use the same roads, water, and trash services as everyone else. So even something as simple as a kid's lemonade stand turned into a bigger pop-up drink business can quietly owe several different types of taxes at once. One really important thing to watch out for is forgetting to track your daily cash sales, because without receipts or notes, tax time becomes a nightmare. So a simple tip is to use a cheap notebook or a free phone app to jot down every sale the moment it happens. Another thing to be careful about is assuming that because you're small or temporary, you don't need a permit, when in reality, many local health departments specifically look for pop-up stands during fairs, festivals, and markets. So the tip here is to always call your local health department before you set up, even for just one day. Lastly, people often forget that if they made any profit at all, even a small amount, they may still owe self-employment tax at the end of the year. So setting aside around 15 to 20% of your profit right away can save you from a stressful surprise later. If you enjoyed this video, check out our online directories in the description below.